Welcome back to Fast Market here on the Schwab Network. It's time for Cash Tag, so let's bring in our next guest. That's going to be Andy Swan. He's a co-founder at LikeFolio. Welcome back to the show, Andy.
Thank you. Happy Monday.
Happy Monday to you. And I think Wayfair investors this year have been doing pretty well, up about 79, 80%, but pulled back with the overall market here recently. But it seems like in this retail space, Andy, I'm not sure what kind of data you guys have on this, but it seems like there's really a hard line between winners and losers in the retail space. Consumer spending has remained resilient. Credit card debt's going up pretty significantly at this point, but Wayfair seems to have righted the ship so far this year.
Yeah, I think you're exactly right, and really sets up well for what we're talking about. This divide between winners and losers seems to be growing, and we think Wayfair is really putting itself on the winner side of that divide. And there is macro weakness in consumer spend for furniture, for home improvement. There's low turnover of houses, I think, is a major contributor, along with higher interest rates and all those things that we talk about all the time on here. But we're really seeing this potentially benefit Wayfair in the long run because, really a few things. First of all, Wayfair really seems to be outperforming peers in a really big way, especially in home furnishing. When you look at them versus Haverty's or Kirkland's or Williams-Sonoma, we're really seeing good traction for Wayfair outperforming all of those peers. In fact, during the back-to-school shopping season, which we think of as a really important barometer for how a company is going to do over the very important holiday shopping season, that back-to-school shopping season, we saw Wayfair mentions increase by 18% with a really big surge during the back-to-school season, delivering a really consistent rise in website traffic. When Bed Bath & Beyond stores started to close, we saw Wayfair web traffic really start to grow. And the best part about all of this, I think, for Wayfair is that, strong back-to-school season, consistent uptrend in website visits, but they're also delivering a really positive customer experience. 75% positive in this sector is very high, especially compared to peers. So we think they're capturing an audience during a time of tough headwinds and delivering a really good value proposition. We think that's the recipe for long-term success for Wayfair.
Andy, a lot of the data, both from LikeFolio's data, seems to hint at a turnaround or a firming up in Wayfair's business. Some of the financial data moving from a $300 million loss a year ago in operating cash flow to now $70 million positive. Some of their numbers seem to show improvement, but there's a bigger question, right? They've had trouble generating sustainable earnings over a long period of time. So the question is, we know it's getting better. The real question is it good enough, though? Is it good enough to buy a $50 or $60 stock?
Yeah, I think it is. I agree with you. We haven't seen that operational excellence that, sometimes we really want to see, but I think it's coming. What we're seeing is that during times where maybe the macro environment is not favorable, some companies can do very well. They can, cut costs and not disappoint their customer base. And those companies, when you come out of it, tend to do very, very well. And we think that we're seeing, at least fairly early, or I'd say mid-inning signs that Wayfair is doing just that. We've got a tough macro environment for the consumer. They're looking to save money. A lot of them are shifting towards an online experience like Wayfair, and Wayfair is delivering in a really big way from a consumer happiness perspective. So we think that actually these kind of tough times and belt tightening could be a long-term very positive for Wayfair. But like you said, we do have to see some operational excellence, some continued expansion of profit and margins in order to just be completely excited about this. But I do like it here.
Yeah, and if you look at price to sales, price to sales ratio about 0.77, that's below its 5-year average of 1.37. So it seems like they're creating some efficiencies here, Andy. But I wanted to kind of go back to that story that everybody's talking about, where existing home sales are down in the dumps, right? New home sales are still working out pretty well. But even in existing home sales, if you go through that cycle where, hey, you bought a new couch 5 years ago or 3.5 years ago at the start of the pandemic, maybe you're looking for something else. Does that come into your data at all where, maybe some people, instead of moving, they're just going to get a refresh?
Yeah, we don't see that as much. We think that cycle is a little longer in home furnishing than it is for things like consumer electronics. The TV that hangs on the wall at 3 or 4 years starts to feel a little older than the couch that's on the floor at 3 or 4 years. But that replacement cycle, will come eventually. And we think what we're seeing from Wayfair right now is very positive towards them to be able to capture that when it does come. And so I think, the big story here for us is they're doing pretty well in pretty tough times and probably getting very, very efficient at it. And so when things start to come back their way, like the replacement cycle you mentioned, or home ownership turnover a little faster, they could be in a really, really good position to be the big winner coming out of that.
All right, good stuff. Positive data here on Wayfair. Appreciate it, Andy. Have a good day.
Thank you.
All right, that's Andy Swan, co-founder of LikeFolio, breaking down the data for us here on Wayfair. Kevin, I was really surprised that this stock kind of rallied as much as it did through the first, few quarters of the year. This stock traded over $90